this video, we will be talking about how to tell if a stock is expensive or cheap. So one of the most common questions investors ask is whether a stock is expensive or cheap. But stock prices do not tell us much. A stock that costs $20 could actually be more expensive than one that costs $200. To understand whether a stock is truly expensive, investors look at different valuation metrics that compare price with the company's financial performance. One of the most common ways to evaluate whether a stock is expensive is by using the price to earnings ratio, which we covered in a previous video. The price to earning ratio compares a company's stock price to its earnings per share. In simple terms, it shows how much investors are willing to pay for each dollar of profit the company generates. If the P/E ratio is very high, investors may be expecting strong growth in the future. However, the P/E ratio alone does not tell us the full story. Investors usually compare a company's P/E ratio with other companies in the same industry. This is because different industries naturally have different valuation levels. For example, faster growing technology companies often have higher P/E ratios, while slower growing industries like banking or utilities typically have lower ones. Sometimes a stock may appear expensive based on its current earnings, but investors still buy it because they expect strong future growth. If a company is expanding quickly or developing new products, its earnings may significantly increase over time. Because of this, investors may be willing to pay a higher price today in anticipation of future profits. It is important to remember that a stock that looks expensive is not always a bad investment. In many cases, high quality companies with strong growth potential trade at higher valuations. On the other hand, a stock that looks cheap may actually be cheap for a reason, such as weak growth or financial problems. That's why investors need to look at the full picture before making these kind of decisions. In conclusion, determining whether a stock is expensive requires looking at several factors. Investors often start with the PE ratio, compare companies within the same industry, and analyze the company's growth potential. While valuation metrics provide useful insights, they should always be used together with other financial information to make better investment decisions. Thank you.